Over the first quarter of the 2024 year, we've seen an annualised national growth rate of just on 6%. Within this annualised national growth rate, there's unprecedented variability between the many states, markets and communities across the country. And it's critical that market participants drill into the specific markets that they're looking to enter. Not all markets are reacting in the same way at the moment, and in a period where there will be less interest rate volatility, demand and supply are joining affordability as the primary drivers of price movements. In terms of our national capitals, Perth continues to lead the country at an annualised 20.4%, followed by Adelaide at 14%, Brisbane at 10.8%, Sydney slowing to 2.8%. One area of particular interest is the emerging enthusiasm from first home buyers who are keen to exit the rental market due to record increases in rents. They're recognising that it makes more economic sense to purchase a property than continue to rent. This is because we've seen rent increases in some cases of 30% over the last 3 years in some of the areas, making loan repayments lower than rents. This demand from first home buyers is largely being met by supply from investors who are looking to release capital gains in the high interest rate environment. This is a healthy development for first home buyers. Although we've seen encouraging reductions in the most recent CPI, services inflation, of which rents and energy costs are large components, along with the July income tax cuts, are all likely to drive upward pressure on inflation, which means the chance of interest rate cuts later this year has reduced. What we see in the near term is far less volatility in regard to property prices and interest rates, and there's a strong likelihood the Reserve Bank will keep interest rates unchanged for at least the next 8 to 9 months. These are all healthy developments for the Australian residential market in the short to mid-term.